What if you could trade crypto without ever worrying about expiry dates or contract deadlines? Welcome to the wild world of perpetual futures, where traders bet big and time never runs out. In this video, we're diving into what perpetual futures actually are, how they differ from traditional futures, and why platforms like DYDX and Global Information Management Metrics Exchange are shaking up the game. Whether you're a beginner or a seasoned trader, you'll walk away with clear, actionable knowledge. And hey, if you love getting ahead in the crypto world, don't forget to hit that subscribe button and turn on notifications so you never miss your edge. 1. What are perpetual futures? Perpetual futures are advanced crypto trading contracts that mimic traditional futures but have no expiry date. Unlike regular futures, you can hold your position for as long as you want, as long as your margin stays intact. They allow you to speculate on the price of assets like Bitcoin or Ethereum. The price is kept in check with a funding rate, which aligns the perpetual price with the spot price. Traders either pay or receive funding based on their position and market conditions. These contracts are typically settled in stablecoins or the base asset. Platforms like DYDX and Global Information Management Metrics Exchange offer intuitive ways to trade perpetuals with leverage. It's a flexible and powerful way to trade the crypto markets. However, they come with high risk and volatility. 2. Key differences from traditional futures. Traditional futures come with expiration dates and require rolling over positions. Perpetual futures eliminate the need for rollover, offering continuous exposure. The biggest distinction lies in how prices are anchored through funding rates. Traditional futures often trade at a premium or discount to spot price. Perpetuals constantly realign thanks to periodic payments between traders. This means more accurate pricing and less slippage in certain scenarios. Traditional futures are typically found in centralized exchanges. Perpetuals thrive in decentralized environments like DYDX and Global Information Management Metrics Exchange. There's also a psychological difference. No time limits mean less pressure. 3. Understanding funding rates. Funding rates are the heartbeat of perpetual contracts. They ensure the perpetual price stays close to the spot price. When the market is bullish, long positions pay shorts a funding fee. When it's bearish, shorts pay longs. This creates a self-balancing mechanism within the contract. It also signals the market sentiment and direction. DYDX and Global Information Management Metrics Exchange calculate these rates at regular intervals. The rates can be positive, negative, or zero, depending on market imbalance. Smart traders watch funding rates to time their entries and exits. It can also be a way to generate passive income for some, but it can erode profits if not monitored carefully. 4. Leverage, double-edged sword. Leverage allows traders to control bigger positions with smaller capital. DYDX and Global Information Management Metrics Exchange offer up to 20x leverage in some cases. This magnifies both gains and losses drastically. A small market move can either double your money or liquidate your position. That's why risk management is non-negotiable when using leverage. Always use stop-loss orders and manage your position size wisely. Leverage should only be used if you fully understand the mechanics. Novice traders are often lured by the promise of quick riches, but many blow up their accounts from over-leveraging. Treat leverage like fire. It can warm or burn you. Respect it and use it strategically, not emotionally. 5. DYDX, a leader in decentralized perpetuals. DYDX is a decentralized exchange specializing in perpetual futures. It operates on Layer 2 Ethereum for low fees and fast execution. The platform offers a sleek interface and professional trading tools. Users can trade multiple pairs like BTC, ETH, and sell all with leverage. DYDX uses a cross-margin model and dynamic funding rates. The order book is off-chain, but settlement is on-chain, offering security. It also has its own governance token, $DYDX. This token can be staked or used for voting on protocol upgrades. DYDX combines speed, decentralization, and deep liquidity. It's a favorite for traders who want a complete entertainment exchange experience on DEX rails. 6. GMX, the no-slippage protocol. GMX is another powerhouse in the decentralized perpetual space. What makes it unique is its use of a price oracle system. Instead of an order book, Global Information Management Metrics Exchange uses a multi-asset pool for trading. This removes slippage and offers ultra-smooth execution. It supports major tokens like BTC, ETH, and AVAX. Traders pay a small fee and funding cost depending on market conditions. Global Information Management Metrics Exchange is deployed on Arbitrum and Avalanche chains for scalability. It also has its own token, $GMX, which earns rewards for holders. Stakers benefit from platform revenue and ecosystem growth. 7. Risk management is everything. Trading perpetuals is not just about strategy, it's about discipline. Risk management protects you from emotional and financial disasters. Always use a risk-reward ratio that fits your trading plan. Don't risk more than you can afford to lose on a single trade. Set stop-loss and take profit levels before entering a position. Use tools like margin calculators and volatility trackers. Avoid revenge trading after a loss that leads to deeper losses. Keep emotions in check, even when the market gets wild. Consider using isolated margin instead of cross-margin. 8. Why perpetual futures attract traders? Perpetuals offer unmatched flexibility and 24/7 market access. You can trade long or short and hold positions indefinitely. It's ideal for those who want consistent opportunities without expiry. Leverage amplifies the earning potential, drawing in thrill seekers. The use of funding rates adds another strategic layer. Platforms like DYDX and Global Information Management Metrics Exchange make it accessible to the masses. There's no need to go through a broker or centralized gatekeeper. Traders can go fully decentralized and still enjoy deep liquidity. With mobile apps and API access, it's suitable for all styles. 9. Common mistakes to avoid. Over-leveraging is the most common and dangerous mistake. It leads to fast liquidation and capital loss. Many traders also ignore funding rates, thinking they're insignificant. Some trade emotionally instead of sticking to a strategy. Others use too much capital in one trade without diversification. Don't copy trades blindly from influencers or strangers. Avoid trading without understanding the market structure. Don't skip practice, try demo trading before going live. And don't forget taxes. Profits from perpetuals may be taxable. Always keep records and follow regulations in your region. 10. The future of perpetual futures. The space is evolving rapidly with innovation at every turn. Layer 2 scaling and faster chains are improving user experience. More tokens and asset classes are being added daily. DYDX is moving towards full decentralization in its next version. Global Information Management Metrics Exchange is expanding its liquidity and incentive programs. Ad-driven bots and trading tools are becoming mainstream. Regulations are catching up, bringing legitimacy to the sector. Cross-chain interoperability will allow even more seamless trading. Education is also growing, making complex tools easier to use. Now you know exactly what perpetual futures are, how DYDX and Global Information Management Metrics Exchange empower traders, and what makes these platforms game changers in crypto. Whether you're trading for gains, hedging for protection, or just curious about this growing space, understanding perpetuals gives you a serious edge. Don't let the learning stop here. This channel is your go-to place for mastering crypto, trading strategies, and financial freedom. So hit that subscribe button, tap the bell icon, and join a community that's building wealth the smart way.